Welcome back, Adam here, and today I'm going to be looking at declaring foreign income using the remittance basis. To do this, I'm going to cover what the remittance basis is, who can use the remittance basis, mixed funds, and I'll show you the entries that you'll need to make on a tax return. When making those entries, I'm going to be using our Go Simple Tax in-browser software, which you can all access using the link below. You'll just need an email address, a UTR number, and your basic contact information to get started. Before we get going, don't forget to like the video and subscribe to the channel for more helpful tax content. Now, let's start with what the remittance basis actually is. So, the remittance basis is a tax treatment that can be applied by certain individuals in the UK. The treatment applies to foreign income and gains only, which means that any income or gains that arise in the UK are treated in exactly the same way as someone who isn't applying the remittance basis. But when it comes to foreign income and gains, applying the remittance basis means that you would only be taxed on income that is remitted to the UK. So, if you had investments and income overseas, you might be able to avoid UK tax by keeping that money out of the UK. Now, of course, there is potential for a big grey area here, as you might be wondering what actually counts as remitting money to the UK. A bank transfer to a UK account is clearly remitting funds to the UK, but what if I gave some money to a friend and they bring it to the UK? Would that count? Luckily, HMRC have some pretty detailed guidance in this area, which closes most of those potential loopholes. They say, commonly, foreign income and gains are remitted to the UK if they, or something deriving from them, are bought to or received in or used in the UK by you or another relevant person, bought to, received in or used in the UK for your benefit or that of another relevant person, used to pay for a service provided in the UK to you or another relevant person, used to pay for a service provided in the UK for your benefit or that of another relevant person, used outside of the UK for a relevant UK debt. They go on to say a remittance will not only occur if you remit the actual or original foreign income and gains to the UK, you will also make a remittance if you remit something that derives from them to the UK, such as a painting you hang in your UK home. Now, you could really drill down into this a lot further to establish who actually counts as a relevant person and so on, but the long and short of it is that if you or your family are benefiting from foreign income or gains in the UK, then you'll usually have to pay UK tax on it. Now, what about who can use the remittance basis? This tax treatment is only available to individuals who are resident in the UK but are domiciled elsewhere, which probably sounds confusing, but an easier way to think of it is that they are currently living here in the UK, but their permanent home, the place that they feel a sense of belonging to, is elsewhere. Now, of course, it's not as simple as just saying, well, I feel a sense of belonging elsewhere and then applying the remittance basis. In fact, it's actually pretty difficult to change your country of domicile. Even living abroad for a few years wouldn't necessarily do it if HMRC believed that it was always your intention to return to the UK. You would usually need to cut ties with the UK completely, often involving gaining citizenship elsewhere with no plans to return. So it's pretty difficult, but it does happen, and when it does, that's known as domicile of choice. What is more common, though, are individuals who are born outside of the UK but now live and work here. They will usually have a domicile in the country they were born in, and that's known as their domicile of origin. Again, you can get very technical and read through the detailed guidance, which will tell you that a domicile of origin is usually the country that your father was domiciled in at the time of your birth. So again, there will be people whose domicile of origin isn't actually the country they were born in. But but in most cases it will be the country you were born in. What's interesting is that you can never lose your domicile of origin. It can temporarily be suspended if you change your country of domicile by domicile of choice, but as soon as you give up that domicile of choice, you would revert back to your domicile of origin, which means you can never be without a domicile. So assuming you meet those criteria of being resident in the UK but domiciled elsewhere, you can usually apply the remittance basis, but there is somewhat of a time limit for certain people, because since 2017, anyone who is born in the UK and has UK domicile of origin, who has been resident in the UK for 15 out of the last 20 tax years, loses the ability to apply the remittance basis. Essentially, this is designed to stop wealthier individuals choosing other countries as their domicile of choice by setting up a base there, still spending lots of time in the UK but avoiding UK tax on foreign income and gains. But of course, that only kicks in after 15 or more tax years. Where you do qualify, the remittance basis may still come at a cost, depending on your situation. Initially, there is no charge, but for non-domiciled individuals who have been resident in the UK for at least 7 of the previous 9 tax years, a charge of £30,000 applies. For non-doms who have been resident for at least 12 of the previous 14 tax years, that charge increases to £60,000. And if you're looking to calculate whether the remittance basis would be beneficial for your situation, you would also need to consider that when applying this treatment, the individual loses access to any income tax and capital gains allowances in the UK. So you would also need to factor in the additional tax that may be payable as a result on top of the possible remittance basis charge. Now, one thing that I would point out here is that the remittance basis charge, if it applies, the £30,000 or the £60,000 charge, is considered to be a tax. So if you're paying it, you would need to nominate which foreign funds you're paying it on. The idea officially is to nominate an amount of funds that would equate to a £30,000 or a £60,000 UK tax liability. So a simplified way of looking at it is, if you had a £30,000 remittance basis charge to pay and the rate of tax that you paid in the UK was 40%, then you would nominate £75,000, because 40% of 75,000 is £30,000. That's the idea anyway. In reality, you don't actually have to nominate the full amount. So what most people will do is create a separate foreign bank account and hold a nominal amount equivalent to £10, which they will then nominate in order to pay the remittance basis charge. The trick is to keep this amount at £10 or less. Anything greater than £10 can trigger unfavourable income reordering rules. Now, let's take a look at mixed funds. If you're thinking of claiming the remittance basis, then it's important to understand what mixed funds are and how they can have an impact on your tax liability. Once foreign income is earned or a foreign gain is realised, if it then gets mixed with other funds, for example by depositing it into a bank account which already contains funds from elsewhere, say earnings from before you became UK resident, capital that might be called, it immediately becomes mixed. That is that when you withdraw or move money from that account, you can no longer identify with certainty which funds you are moving. So in that situation, if you remit funds from a mixed account, a taxpayer could easily say, well, yes, I did earn £1 million of foreign income, and yes, I happened to remit £1 million to the UK, but the million that I remitted was actually some capital that I already had in my bank account, so you can't tax me on it. But HMRC obviously have other views on that. So to avoid that situation where taxpayers can self-certify which funds they're remitting to the UK, HMRC came up with a set of matching rules which state, under the rules, untaxed foreign income is treated as being remitted in priority to untaxed foreign gains, which are both treated as remitted in priority to foreign income and gains on which foreign tax has been paid. Amounts of capital of a tax year are taken into account last. These ordering rules are applied to income and gains, etc., of a later tax year before being applied to those of an earlier tax year. This is known as the last in, first out principle. Each transfer must be identified separately and matched against the amounts of income and capital that were in the fund immediately before the transfer. This is particularly important where more than one transfer is made in a tax year. This means that if you're applying the remittance basis and had foreign income or gains in a tax year, then any money you transfer to the UK from mixed funds would usually be taxable, or certainly some of it, because they're going to assume that you're transferring untaxed foreign income first, then untaxed foreign gains, then foreign income and gains on which foreign tax has been paid, and finally any other capital. One clever planning technique could be having a separate bank account for each tax year and each source of funds. For example, the 23-24 tax year, you could have 4 bank accounts opened on the 6th of April, one for income, one for gains, one for capital, and one for the £10 nominated income. This way, you have flexibility over what you're transferring to the UK and when. Although, if you are in a position like this, I would also suggest paying for some tax advice. Now, let's look at the entries that need to be made on a tax return when claiming the remittance basis. So here I am, I'm logged into my GoSimple tax account, and first of all, what I want to do is declare that I'm applying the remittance basis to my foreign income. So I can do that by adding a page and then selecting SA109, which will be at the bottom. That's the residency pages here. So I'll select that one. I can then work through the questions that are presented to me. Lots of these won't actually apply, as this section produces all of the residency related questions, and I only really need the ones that relate to the remittance basis. But we'll start from the top and then we'll work through each tab that we have here. The very first question is, were you resident in the UK during the tax year? I'm going to say yes, I'm resident, because you need to be tax resident in the UK in order to apply the remittance basis. Were you eligible for overseas workday relief? This one isn't going to apply, so I'll leave that as no. Do you qualify for split year treatment? Again, that's a question trying to work out if I was considered resident in the UK, so I'll leave that as no. Did you have a home overseas during the tax year? I'll leave that one as no, but could potentially apply. How many days in the 22-23 tax year did you spend in the UK due to exceptional circumstances? Again, we're looking at residencies. That's not going to apply to this situation. How many ties to the UK did you have during your overseas part of the year? Again, that's talking about the split treatment. And any additional information at the bottom. So it's only really this top question on this first tab that I'll need to answer. You can go and get more detail about each question by clicking on the question mark if you're unsure. But I'm happy with that, so I'm going to move on to the next tab, which is personal allowances. Were you entitled to claim personal allowances as a non-resident? No, because I am resident. Are you entitled to claim personal allowance as non-resident? Again, I'll leave that as no, because we know I've already ticked that I'm a resident in this case. And then the next 3 boxes are selecting countries in which you are a national or resident. So I'm going to complete this as somebody who was born outside of the UK but now lives here in the UK. So they have domicile of origin elsewhere, but they are resident here and entitled to use the remittance basis now. So if I select that I have a country of which I'm a national or resident, so I start with the country that I was born in this example. I'll look for Mexico in this case. And then country 2, I could also put the UK, as technically I'm going to be resident in the UK as well, per my selections. I'm happy with that, so I'll move on to the next. Now, this tab is looking at countries other than the UK that you are resident for tax purposes during the tax year. So again, in this example, I'm just saying that I was resident in the UK but domiciled elsewhere. So these questions here are talking about double taxation agreements. These won't apply to this situation. The domicile tab. So if you're domiciled outside of the UK, is this relevant to your income tax and capital gains? You can see you've got a drop down here, but essentially what's going to happen if you say yes, which I'll need to in this example, because I'm domiciled outside of the UK, it's going to generate a bunch of additional questions. And you can see them below. If you were originally domiciled in the UK, what date did you change status? I'm not going to complete that one because, again, I'm saying that I was domicile of origin outside the UK, but I now live and work in the UK, so I have domicile of choice in the UK. And that's the second question here. If you were born outside of the UK, enter the date you came to live. So I'm going to go with the 14th of June 2012. So we can say that I've been here in the UK, resident in the UK for 10 or so tax years, so that we can see the remittance basis charge being applied. Is 22-23 the first year you have told us you were not domiciled in the UK? No, it's not. I've done 10 or so years. Were you born in the UK? No, not in this example. Were deemed UK domicile under condition A? I'll say no. Were deemed UK domicile under condition B. If you would like to know what those conditions are, again, you've got the detail by clicking on the question mark here, but they won't apply to my situation. Enter the number of years you've been resident in the UK. So this is going to be important. I'll say 10 tax years resident in the UK, so we can try to see that remittance basis charge being applied. And then I'll just move on to the last tab, remittance basis. Do you wish to claim the remittance basis for the year? That's the important one. Yes, I do. Is your unremitted income this tax year less than 2,000? We'll say no. There is an allowance that applies below that threshold, or an exemption. Were you resident for the 22, 23 and 12 or more of the preceding 14 tax years? Remember, if that applies, you'll pay the £60,000 charge. So I'll say no. But were you resident during this tax year and 7 or more of the preceding 9? I'll say yes. So what I would expect is that the £30,000 tax charge applies. What is the amount of income you are nominating? Let's go with our suggested £10. And you can provide detail of that below if you want to. What is the amount of capital gains you are nominating? So I'll leave it as just income, but if you did have capital gains as well, then you could you could provide detail of that in this box here. Adjustments to your payments on account, I'll leave those as they are, but you can adjust those. Do you wish to claim relief from UK tax for foreign income or gains invested in a qualifying business? No. Have you remitted nominated income or capital gains during the year that is higher than that £10 aggregate limit? No. But that's why it's important that you don't exceed that £10 threshold. What is the total amount of relief that's being claimed? I'll leave that as 0. Please enter the company registration number. This all applies to the qualifying relief, investing in a qualifying business up here. And then at the bottom, we've got, have you previously claimed relief for a qualifying investment? No. If you have UK income or gains deemed to be foreign under qualifying asset holding company, again, we'll just leave these all as no. So I'm happy. I've completed all of these. I've worked through each tab and I'm going to save that. And you can see immediately it's telling me you may be entitled to claim personal allowance. Please check your eligibility. Okay. But what you can see here is that £30,000 remittance basis charge is being applied automatically by the software. Now, if your only reason to complete the tax return was to claim that remittance basis and you didn't actually have any income to declare, then those would be the only entries required. However, in reality, as we already know, UK arising income is taxed in the usual way, that most likely you're going to have some other income to declare. So what we're going to do, we're going to add in a source of income just to have a look at how that's going to be taxed on the tax return. So if I click new page and I'm going to go with, I could go with any type of income, but I'll go with employment income. We'll select that and then we'll just enter example employment. We won't say that we're a director of the company and then we'll save that. From here, I'm just going to go with a nice round number. So if I add income by clicking on the plus sign and I'll just select that it's salaried income, you should be able to see here I'm going to enter £20,000 just so it's nice and round and we can work out how the tax should be applied on that. So I'll leave everything else blank, Save that one, and you can see immediately there that my tax liability over here on the left hand side has increased by £4,000. And really, that's exactly what we would expect. We already know that because I'm claiming the remittance basis, my personal allowances for income tax and for capital gains are retracted in full, and we'll know that tax will then be applied at the usual rates of income tax. So 20% initially, 40% and then 45%. So £20,000 of employment income, I would expect to see that taxed immediately at 20%. And that's exactly what's happened. That's why my liability has increased by £4,000. And those were the entries needed on the tax return to claim the remittance basis. Remember, you'll find a link to the Go Simple tax software below. Thank you all for watching. See you next time.